In mid-2026, real estate analyst Dave McGaugh released a market outlook for Palm Beach County that challenges the typical narrative of the Florida housing market. On the surface, the data looks stable. Mortgage rates have cooled from their 8% peak to roughly 6.9%, and overall county-wide prices continue to climb. However, these broad averages are misleading. The Palm Beach market has divided into two completely different environments that rarely follow the same rules. Success for buyers and sellers in late 2026 depends on ignoring the general headlines and understanding the specific forces pulling these property types apart. The first half of this divide is the single-family home market, where competition remains high and supply is scarce. Single-family median prices hit $675,000, a 5.4% increase. Active listings fell 23%, leaving 4.1 months of supply. Scarcity means homes sell in 40 days for 95% of list price. Demand is propped up by a consistent influx of cash-heavy investors and out-of-state relocators, who are less sensitive to interest rate fluctuations. For single-family properties, a lack of inventory has created a market that is largely insulated from the broader economic cooling seen elsewhere in the state. The situation changes when you look at the luxury and coastal condominium sector, which is facing a much more difficult path. This scale shows the imbalance. While single-family inventory is tight, the condo market has ballooned to a 9.3-month supply, and units are sitting on the market for an average of over 100 days. This surplus isn't due to a lack of interest in the properties themselves, but rather the heavy financial burdens that now come with owning them. Florida home insurance premiums now average $8,292 annually, and costs continue climbing through 2026. At the same time, new legislative mandates are requiring condo associations to fully fund their structural reserves for the first time. To meet these legal requirements, many buildings are issuing massive special assessments and sharply increasing monthly HOA dues, forcing some current owners to sell and making buyers cautious. In this segment of the market, the monthly carrying costs and potential assessments are now as significant to the buyer's bottom line as the purchase price itself. Looking toward the end of the year, McGaugh expects mortgage rates to stabilize and potentially dip towards 6% by December. For buyers, the third quarter provides a strategic window. August and September typically see the highest inventory levels and the most frequent price reductions before the winter seasonal residents arrive. However, any condo purchase now requires an exhaustive review of the building's financials and reserve studies to avoid unexpected five-figure assessments after closing. Sellers of single-family homes still hold the leverage, but they must prioritize turnkey condition and accurate pricing, as buyers have become highly sensitive to repair costs. Condo sellers face a more competitive environment and should be prepared to offer concessions or full transparency regarding building reserves to move a property. In 2026, Palm Beach is no longer a single market. Success now requires moving past county-wide averages and basing decisions on the specific financial realities of each property type.